Morning, Steve Free in Chicago with the morning grain comments. Overnight grain prices are about unchanged, corn up a little bit. The big news overnight is that the United States, Canada, and Mexico have come to a trade agreement. Most of the experts on the business channels this morning said this is pretty much the same agreement that was before. It's just that it puts behind us any uncertainty about trade between those two countries. There are some stipulations like in dairy and cars and things like that, but all in all, it's just opening up free trade again with all three countries, and the stock market was up about 200 points because of that. Over the grains, you send around to all the experts, is there anything bullish in this market? And they all come back and say, well, you've got record global corn demand, record corn demand out of the United States. You've got record soybean global demand. And the wheat should eventually shift demand from the Black Sea to the United States. But you also have too much supply in the world, and the market has a lot of trouble moving forward. For 2019, assuming normal crops in the Black Sea, normal crops in South America, and normal U.S. crops will have way too much supply. And so again, that limits the upside. The only bright spot could be that if Brazil runs out of beans and Argentina runs out of meal before their next harvest, that could help the bean market. We also have been watching pretty closely farmers selling in corn. And if they don't sell a lot of corn, that could offer a little bump in prices. And finally, the National Weather Service came out with a 30-day outlook, which is basically wet across most of the Midwest. This could slow harvest. I doubt if it causes any yield loss or damage or things like that, but it could slow harvest down. And when we've got boats to load, processing plants to run, that could offer some support to spreads, to basis, and maybe a little bit to the futures market. A sobering thought, though, is that one private group came out and said that U.S. bean exports this year is going to be 48 million tons versus 56 last year. Brazil could ship 81 versus 76, and Argentina could ship maybe 10 versus 7. And then when we look at China imports, 88 versus 93 this year, and that U.S. will ship only 1.4 million tons of beans to China versus 28 last year. 74 out of Brazil will go to China versus 60, and 10 out of Argentina will go versus 3. So all in all, that trade uncertainty between U.S. and China is certainly going to help U.S. demand for bean exports. So we'll watch the weather. It's a new month. We'll see if the funds want to come in and buy commodities on this trade deal issue. And we'll always be watching Washington for any news that comes out of there on anything new when it comes to politics. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.